What's up, boys? It's late at night right now, but I just want to start off this YouTube video by saying there's gonna be so much content that I'm gonna be making. Like, I don't want to say that I'm like gonna be posting every day, but there's gonna be a lot of gems I'm gonna be posting on my next upcoming videos. And like I said, for this video, I want to promise you guys the trading video. So tying everything back that I was talking about, you know, in the last two videos with this video of like everything has to do with the journey of making money, and you know, specifically with trading, because trading for me, I realized this, and I always knew this from the beginning when I started trading, right? You have to get very, very, very close with yourself to be able to succeed at trading. Because with trading, you know how everybody says like, oh, it's you versus yourself. That's true, but you don't really understand what that really means. What that really means is you have to face yourself. You have to face, and this goes past trading. You have to face your greed, your fear, your anger, your frustrations, your boredom, especially your boredom, bro. One of the points I want to just quickly say is that boredom will probably be the most biggest trials that you will ever have in trading, right? Because right now I haven't placed a trade in like, I think, a month, because I'm sitting here on my hands waiting for my setup, you know. And that's exactly what a lot of people teach you, is to only take A+ setups, right? And that's completely true. Like, I'm not gonna sit here and force a trade. There's so many trades I could have taken, but they weren't like up par with, you know, the amount of money I'm gonna be risking for these trades. And you know, it's all about being very diligent. Like with trading, I feel like for me, it's less is more, right? People try to, like, you know, take it very serious and do this and do that, and yeah, of course that's true, but you have to understand what you're doing, and do you have the right perspective on what you're doing. It's like, you know, I used to watch YouTube videos about trading all day long, like try to spend as much time as I can with trading, but that's not how you really, that's not a guaranteed way of succeeding in trading, bro. Hell no. Because you learn something, like, you can get over cluttered with the amount of information that there is out there about trading, all of these people talking about trading, and you know, all these gurus, especially these gurus talking about trading. Like, yeah, of course they be saying some good stuff, but like they say of not pure intention to just, you know, speak about what actually goes on behind trading. And it's like, not only do I want to show you like the trades that I take in, and we're gonna do like back tests and shit of all the trades I've taken last year. Like, there's some pretty good trades, some very successful, and very there's a lot of mistakes that I made, but yeah, we're gonna break that all down in later videos. But here, I'm not here to, like I said, to flex and say, oh yeah, I be hitting good ass trades. Like, I made like 100%, 150% last month. You feel me? I ain't gonna talk about none of that shit. Just really just the how do I say this? The mental battlefield that you encounter when you start trading, or when you are trading right now. Like, everything is just in your mind, bro. You look at this market, like, even the simplest thing is, I moved on from this a while ago, but blaming the markets. A lot of people blame the market and say like, oh, these sellers, these buyers just didn't do it, try to be right. You know, that's the biggest thing about trading. You don't never try to be right. You want to analyze the markets and just see, what do you call it? And just see where you need to put yourself to get in the position in order for you to succeed or to make money. But yeah, boys, I'll catch y'all later. And tomorrow I'm gonna go sleep real quick and wake up. I'm gonna show y'all what's going on in the market tomorrow morning. But yeah, bro, I'm gonna catch y'all boys in like a couple hours. Alright, what's up, boys? I'm back at the crib now. We're finna break down the markets and everything. All the things I've been talking about, I'm finna apply not all of it, obviously, but all the things I've been talking about, I'm gonna tie all back to trading, so you boys can kind of get a visual understanding of, you know, what all the things that I've been talking about. So I'm gonna put y'all boys down here real quick. But yeah, let's get right. So look, so before I talk about anything else, right? The way I go about the markets is very, very simple, right? Because with trading, you can easily overcomplicate things and learn a lot of things and overcomplicate it and put a bunch of labels and words to it, right? Let's break it down very, very, very simple, right? This is how the market moves, okay? There's 3 ways a market can move. Like this, okay? There's an uptrend, which is this, is making higher highs and higher lows. There's a consolidation where prices in a range is not really moving. Like you can see right here, it's just moving sideways and prices going downwards. So that's the whole structure. These are only 3 ways. Of course, there's like variants and different types of, there's different scenarios that the market can move at certain times. But these are the core fundamentals, and this is exactly how I view the markets. So it's either going up or going down. And say I want to get into a position, right? If I want to look at market conditions, I never want to trade this right here. Yeah, I never want to trade this right here. Trading this right here is a lot better because the thing I understood about trading is it's all a psychological war between buyers and sellers. That's all it is, right? Yes, of course, you could talk about these big funds and these big banks that move the markets or whatever, but let's not get into that right now. Just stick to the basics. The basics is when markets are moving upwards like this, it is bullish, which means that buyers are more stronger than sellers. Right here, this is very key. When you see price moving sideways or is chopping, consolidating, or is in a range for like days or weeks or whatever, that means buyers and sellers are like equal. That like there's an equal amount of power or pressure between both of them, so price wouldn't move, right? There's buyers up here, same amount of buyers up here as there are, or not buyers, sellers up here as there are buyers down here at this level. And for the last one is a downtrend. So a downtrend is when sellers are stronger than buyers, right? So this is the key fundamentals. And when you look at price on any time frame, this is exactly what it looks like, right? But the thing is, I've switched from day trading to more of a swing trading because on the day, like I would back test and I would forward test the day trading, my day trading, what do you call it? Setups like within the day, and it's like you have to be very diligent. You have to be very precise with it, right? And it's like, yeah, of course I was able to do it, but now switching to swing trading, which is like holding my trades for longer than like a day or whatever, right? It's more, it brings me more clarity, right? So that's what I want to get into, that point of, trading is more of building your own edge for the market. There's a saying, and I hear this everywhere, no two people trade the same, right? So all I want to do right now when I'm making this video is to show you guys this is how I trade and this is how I view the markets, and you can take some core principles and apply it to your own strategy, your own edge or whatever, right? There's 3 main components with trading. Let's go into the next point. Delete all this. There's 3 main components, which is strategy, there's risk management, and there's psychology. You need all of these 3 things to what do you call it? To make progress in trading, right? You need your strategy, you need your risk management, you need your psychology, right? Because the strategy, I guess I can say strategy. No, that's what edge is. So this is basically all these 3 combined is your edge. So you want to focus on which is lacking. So say your strategy is good, your risk management is good, but your psychology is ass. When you get into the markets, you'll be scared to press the buy button, the sell button. You feel me? And that's what you need to work on. But right now, I'm just giving an overview of a very rundown of how I trade. So we're gonna keep it really simple. I can get into deeper topics and get deep into all of these 3. And you don't wanna. Here's the biggest thing, bro. Y'all don't ever want to hop strategies. You don't ever want to do that shit. Like a strategy, yes, you can learn a strategy from other people, but a strategy is really this is where it ties back into of everybody trades differently. Your strategy is very unique. Like you can look at ICT and all these these strategies that people make, and it's like, yeah, they're cool, but it's like, can you understand it, right? So that's what I'm saying. Like when you switching from strategy to strategy, all you're doing is just watering a plant, but then you give up on that plant. You go water another plant, and then you wonder why the plants are growing because you ain't watering the same plant, right? So the same goes for strategy. You don't ever want a strategy hop, because I used to do that in my first 6 months of trading. Like I would try this one strategy, it will work, but then it will die out, and I'll go into the next one. It's like you need to see through what you're seeing. Let me explain that real quick. Like, just because something don't work don't mean that you should go and try something else. It's like the people who do business, right? They do different types of business. Like they hop from business to business. It's like the business works. It's proven to work. But you haven't allowed yourself to actually grow and understand what is wrong with the strategy or the system that you're using. So I'm not saying never switch strategies. I'm saying that, just because a strategy doesn't work, don't mean that you should change it. You should find a strategy that makes the most sense to you and build off from there, right? Because that's only the tip of the iceberg. When you look at the strategy, like, oh shit, I fuck with the strategy, right? Let me get into it. There's a lot more to that than just, the strategy itself. It's about you understanding what you're looking at, right? So what I just explained earlier about the market structure, that's exactly how I see the market. And if whatever strategy works for that, I'm gonna use it, right? So now we go look at the markets. So I always, if a market is moving, like, okay, so usually, let's say gold, right? Hold on, give me a second. All right, so look. So with markets like NASDAQ, US30, and gold, for example, right? They all move I say gold is more on the outlier. I'll say, okay, it's just NASDAQ and US30, right? Because those are the main pairs I trade. So NASDAQ, US30, gold, and Bitcoin. Those are the four main pairs I trade in. About that, you don't want to look at too many pairs at once. Like that's what I used to do. That's why I have all these stuff right here. But I like to keep it here because it looks pretty. You feel me? But anyways, you don't want to look at too many pairs at once. But going back to my point, which was, these pairs like NASDAQ and US30, they move very consistent. As you can see, like, over the past, couple, like a month or two, it's moving really weird. I haven't been trading NASDAQ or US30 these past 2 months, actually. I've just been trading gold and Bitcoin mainly. But with NASDAQ, say, for example, back here, right? So what the time frame I use, the question that, a lot of people ask, which is, what time frame do you use? You use all of them, but where you start. So say, for example, I start on the 4-hour time frame, because when I look at the daily, the daily is cool. The daily, you can pick up some stuff from it, but all these time frames, you use all of them to build a narrative. That's basically what you're doing. So I usually start in the 4-hour, right? So looking at the 4-hour, as you can see, price is in an uptrend, right? There's not really much structure, but still, it's an uptrend. It's buying up. There's a lot of buyers, but price goes and taps support. It builds support, and you see something very interesting, bro. Look at this. Structure is not being able to, the highs aren't being able to buy above its previous highs, which is this. So this high is lower than this high, which is lower than this high. What does that mean? All you're seeing is buyers are getting weaker. Sellers are getting stronger, because you can see sellers are pushing price down, right? Push price down all the way out here. Buyers try to buy it up. Boom. Oh shit. Sellers come to the market, push it down more and more and more, right? So I'm looking at this. I'm like, okay, I'm predicting, not predicting, but I'm anticipating a break. Either way, it doesn't really matter, right? It can be down or up. But in this example, price broke and closed under resistance, or not resistance, support, which is, I'm not gonna explain that real quick. Basically, this is support, this is resistance. That's all it is. Very simple. So look, it breaks support, goes down right here, right? So right here, there's really no position to take, because I don't know, it's not really clean to me. But if you can look at this trade, right? So this trade, this area is where it broke out of, right? So what that means is that there's a lot of sellers in this area, right? There's a lot of buyers and sellers, right? But since price pushed below that, buyers got out the market, because they're like, okay, they're strong right now. I want to wait for them to for us buyers to buy price back up again, which it did. Exactly right here is where buyers found a key level, right? So now price buys up and it buys back up to support. But what does it do at support? Or not support, resistance. This is now resistance. What does it do? It sells off. So I want to see more data, right? So basically the time frames, the higher time frames don't give you as much data as the lower time frames. That's just really, that's how I see it, right? So if I want more data, right, I go down to the 1 hour. Okay, I see what's going on in the 1 hour, right? Look at this. Price goes down, like what we was talking about. Price bought back up, and then it tapped support, resistance again, right? And as you can see, sellers was like, nah, hell no. Sold price immediately. So right then and there, I saw, okay, since sellers were able to sell price from here down here, it will do the same again. Because, there's really, like, you don't want to really, how do I say this? It's called traffic, right? So free traffic is like, there's no consolidations, like right here, right? There's a lot of traffic right here. There's a lot of points where buyers and sellers can step into the market. But right here, as you can see, price goes straight down, right? So there's not a lot of buyers in this whole area. Yeah, of course, there's some right here too, which they reacted to, right? But overall, sellers are in control. Why? Because they broke below this level right here. So, boom. Damn, I'm talking about my strategy. I'm gonna talk about psychology later, but let me explain this real quick just to get y'all a little gist of how I trade. So right when I saw that, I was like, hell yeah, I'm finna get in. So I'm going down to the 30 minutes. Let me see what it looks like. So 30 minutes. Actually, I think I just entered just wherever. Like I enter after the 1 hour close. Let me see what the 4 hour looks like. Yeah, I think, yeah, okay. So I entered just whenever price starts selling from that level. So just think about it like this, right? Key levels, like especially like right here, there's sellers right here and there's buyers right here, right? That's exactly how it works. And sellers sell price down here and buyers buy price back up. But since it is below this level, buyers, like I said, are out the market. Buyers found their leverage, the best momentum when they buy price right here, which shot it back up, right? So we can take all this narrative, everything I'm talking about, right? I'm building a story. So I'm understanding where buyers are, where sellers are they strong, who's stronger than the other, right? So we established that sellers are strong than buyers. The thing with bias is that when you have bias, it can very cloud you, and you can get easily stuck on one bias, right? I don't really want to look at this bias. All I look at it is sellers stronger or is buyers stronger? So in this example, sellers are stronger. So when price sold right here, I was like, okay, let me get in. My stop loss, so I just explained my entry, right? Which was, I'm gonna get in, I'm gonna put myself in a position around where price is showing me that it's gonna start selling again, right? I just established that. Stop loss. You wanna put your stop loss when you're wrong. Basically what a stop loss means is that, when people say, oh, I have 100% trading, 100% win rate trading strategy, everybody says this. They're bullshitting. You need to protect. This is what risk management is. It's not. This is a little small part of risk management, but you want to cut your losers short because you don't want to wait for price to go all the way up here and then sell. Because once it goes back above here, I want to say it's bearish, but I would say it's a likelihood that's going to go higher. So might as well just cut your losses because you don't want to blow your account because it could easily just run back up again because there's a lot of buyers at this level. But thinking about probabilities, that's a very low probability because sellers are very strong. You see how sellers are pushing price lower and lower at all these pivot highs? They're pushing it lower. So yeah, of course they can go up here, but most likely it won't, right? But anything can happen in the market. So let's take that into consideration. Putting stop loss above here. So where my TP is, right? Where my take profit is. Where is the next level that price will go against me, right? And as you can see visually, right here, buyers have established leverage and power over the market at this level, 25.1 thousand. So that's where you're gonna put your TP. You get in the position. and then boom, you just let that shit ride. That's what I've been doing. So that strategy out the way, this is exactly like literally how I think when I look at the market and like try to analyze it, right? So risk management, that's the next point. Risk management. So yes, I'm gonna put my stop loss above here, but how much am I risking per trade, right? And I've established this. So I kind of created a game plan. You need a game plan when you hop into the markets because you need to know. You need to have how do I say this, like a structure. So I have an account, right? I don't trade prop firms anymore because of the same reason. Of course, I don't have no hate against prop firms, but they very shady. So I just hop to a live account, right? So say I have 10 bands in an account. I want to be able to risk, I'd say 10 to 20%, because think about it, right? If I'm risking 10%, I have to lose 10 trades in a row to blow my account. Or say if I'm risking even 20%, I usually risk around like between there, 10, 20%. If I'm risking 20% of trade, it would take me 5 trades to blow my account. If you blow on your account after, okay, of course, 5 trades in a row, losses is very common. So that's why I risk 10%. So if you're losing 10 trades in a row, you're kind of shit. Even 5 even. Because I don't really trade, like my trading days, I only trade probably like 5 days out the month. I don't trade that much. Like that's for psychology wise. But anyways, so look at your risk. Like especially when you're trading a prop firm, even with a prop firm, right? You have a max drawdown of 10%. You're gonna risk 1%. Like I guess hold on. I'll take that back. 1%. That's pretty cool. I'd say I'll be risking 2% a trade with a 10% max drawdown, because it's like now I have to lose 5 trades in a row. You feel me? In order to blow my account. But yeah, going back to my point, just understanding your trading skill, which is okay, how good are you at trading? Basically, trading, you're betting on yourself of how good of a trader you are. So if you're more confident as yourself as a trader, and not only as that, but as the what position you're in. If you're in a really good setup, yeah, I'll risk more. You feel me? And that's really all trading is. It's just not psychology, probabilities. That's all it is. Like it's basically like gambling. Like I'm admitted, trading is literally gambling. But I'll simplify, or I'll be more specific. Professional gamblers, because professional gamblers, I did a lot of studies in it, and I have gambling experience myself, so I can tell you, professional gamblers, they don't let their emotions get to them. But going back to my point of trading, which is you're basically you're thinking logically every time you trade, because you can easily, with the psychology part, right? You can easily get lost and try to risk more than you should, risk less than you should, be fearful, not getting to a trade very late and trying to like force a trade. All these type of things, they exist, of course, but to run your trading career off of that is very foolish. You would not last long. So that's what it is. That's risk management. And yeah, looking at your positions that you take, this is a 1 to 2.4. So if I risk 10% of 10 bands, that's a band, I'll make 2,400 off of this trade. And think about it, right? Usually my trades are a 2 RR or plus or more. So like a 2 to 4 RR. So I'm risking $1 to make $2 to $4 per trade. So if I win one trade, so say I'm risking 10% a trade and I lost 2 trades, so that's 2 bands gone, right? I'm risking 10% a trade. If I make one trade, it will make all my it'll make all my losers back plus more. So you can kind of look at it as like, analytics, like back testing, like journaling your trades and understanding, like, how do I say this? Just understanding your cushion that you have. Basically, that trading account is your cushion. It's like when you put your money into a trading account, just say that it's gone. That's kind of what I do most of the time, and just it's just numbers on the screen, and just all you're doing is just growing and scaling your account. So about risk management too, I'm risking 10% a trade. Here's the way I approach that. But if I lose a trade, I would take the same amount of risk that I took the last trade. So say if I risk 10% one trade, I have 10 bands, risk, and I lost $1,000. I want to do 10% of 9,000. I'll do 10% of 10,000 still until I get back up to break even, and then I'll risk 10% of the account, right? I think I should have explained it right. Hold on. I don't know if you guys understand me, but say I win though, right? Say I make, say 10,000 account, risk 100, or risk 10%, and I make 4 bands, for example. I hit a 1 to 4, right? Now my trading account is 1,400 or 14K, right? Now I'm risking 10% of this. This is exactly how you scale, because now I'm not risking $1,000 anymore. I'm risking 1,400. You feel me? So that's exactly how you should take trading, especially when you're like winning. You take 10%, only 10% when you are in profits, basically. But if you lost a trade, so now your account is that, say it's 8K, I would still risk $1,000 until I get back up there. That's basically how it is. So it's like, it's such a easy, not easy, it's such a very simple, I want to say risk-free, but a plan to grow my account. That's basically all it is. So damn, I never heard anybody talk about this on YouTube. But psychology, I'm gonna briefly run down everything. I'm not gonna yap as much, but yeah, psychology. Biggest thing I've learned from psychology is patience. Do not ever, this is one of my biggest flaws or biggest mistakes I made in trading, which is to force a trade. I'll go into the markets, and if it doesn't look clean, like for example, which is this trade right here? Right here. I didn't take this trade. I just marked it up because I was planning to. I had alert set right here because I saw, okay, price is above a high, and it broke above there once. It did it again. So that's exactly what it did, right? But my entry wasn't I didn't find my entry, so I wasn't gonna force a trade, because you can look on this trade on the 5 minute. I don't really look at the 5 minute as much anymore, but let's see. If I would have gone in 8:30, market opens, there's really not enough evidence and information to tell me that price is gonna buy up. That's why I didn't take it. You want to be very careful, like with taking bullshit trades. You don't want to ever take bullshit trade, because that's another one of my things is I'll take bullshit trades and it'll eat up a lot, and I'll risk a little bit knowing that it's not an A+ setup, but it's better to just not take it because you're just wasting money. You feel me? So it's rather you just sit back and just like paper trade and just see how the markets play out. But yeah, this is a trade that I didn't take because there was no, really not much confirmation for me to say that, oh, price is gonna buy up, because it didn't really break structure as much. And all price did when market opened was just shot straight up. So it's like, even if I did get up or get into the position, say the highs right here, it breaks highs, if I get right here, yeah, it's not that. This could be the trade, but I'm never looking at the 5 minute. The lowest I'll probably ever go is like 30 minutes. Even 30 minutes, look at this. What is this RR? You feel me? I mean, it's still a 2 RR, but yeah, I don't know, it didn't look pretty to me. But yeah, that's just really it. Like with trading, you gotta learn how to sit on your hands. And when you take a trade, you don't get excited. Like, you get into a position, you're up in profits and closing profits early. That's the biggest thing I used to do too. Like, do not close your profits early. Let it run. Like, say even if it does go up here, yeah, I'll take out. But yeah, bro. Like, if you're in a position and price does something like this, like especially on gold, right? Price does something like this. I fucked up on this trade too. I sold early, and I did it because I saw this. I was up profit. Starts selling crazy. I was like, oh shit, like, not even, if it's over here, I ain't gonna lie, I'd say I'll just move. If I want to do something about it, instead of closing the trade, I'll just move my stocks to break even. Very simple, and now this trade is risk free. But yeah, that it all ties back into being patient, bro. Because it's like, even with day trading, like intraday trading, when you're trading every single day and you're opening and closing a position in the same day, yeah, it still requires some patience because you need to wait for your setup. You need to wait for the setup to play out if you're in a position. And yeah, that's basically it. And suffer or going through drawdown and shit. Like, you don't want to sit through that too. Like, it didn't hit your stop loss. Why are you gonna pull out? There's many times where price was in drawdown for like 2 days, 3 days. Hold on. and it stopped me out too. Oh, I just saw something. Hold on. This one trade I took a while ago. This one. Yeah, look at this right here. So it don't mean you did nothing wrong. You feel me? Like, this is what I was saying in my videos a long time ago, which is don't let your losses, don't judge yourself off of your losses and your wins. You shouldn't judge either. If you win, you win. If you lose, is whatever. As long as you follow your strategy and your plan, that's all that matters. And this all ties back to psychology. It's very, very, very important. You must be able to fucking sit and meditate and just watch the chart. Like, obviously, that's kind of intense, but you don't really want to look at the markets when you're in a position, because it'll fucking bring you hella emotion. Oh, you're in drawdown. Oh, now you feel like shit. Oh, you're in profits. Now you feel happy. You feel me? And you want to start scaling into that position. It's like a bunch of bullshit, bro. You want to avoid a lot of noise in trading. That's probably the biggest thing that I can say. You need to avoid noise, bro. Like, people be trading on the 1 hour and 1 minute and 5 minute. They're demons, bro, because they see hella noise on the 1 minute. Like, think about the 1 minute, bro. It's like price going up and down, up and down, up and down. You're like catching like small movements, and everything's compacted. Like, so there's like four. Let me explain this real quick. There's like 4 types of trading, right? Scalping, intraday, swing, and investing. Well, investing isn't really ties back into anything I'm saying. That's another thing, but these 3. So the shorter time frame you trade on, the more stressful it is. That's what I realized. So just find your balance, and yeah, it could be on the 1 minute. If you're 1 minute down, I respect you, bro. But yeah, that's basically all it is. Trading is less. Less is more. That's all it is. You need to make trading as simple as it is, because it's very simple. All you're doing is just understanding buyers and sellers. That's all it is. So ain't no damn, like, yeah, you could use shit like what these new people are talking about some fair value gaps and order blocks and divergence and shit like that. Like, they're cool. They're concepts too. That's how people view the markets. But if you don't understand that shit, I mean, it's like, that's the thing. I want to talk about something real quick. Like, that ICT community, bro, I have no hate against them, but it's like a religion. You feel me? Like, everybody, when they start trading, they'll trade ICT. Like, seeing that this is like the thing. And it's like, say a lot of times, like when I traded back then, I traded for like 6 months, used ICT for 6 months to a year maybe. And it wouldn't never really work. So it's like, if something isn't working, if you tried your hardest to water that plant, the strategy, and it's not watering, yeah, I ain't gonna lie, you don't even understand what you're looking at with that strategy. So that's probably the time for you to switch. You feel me? But yeah, I'd say when you first start, for all the guys that are starting to trade, you want to just go and look at the charts and see where you can buy and sell. That's the best to start. Like, of course, you should learn buyers and sellers, all the basic things, like how to actually position your lot sizes and risks and all that stuff. But all the basic stuff, I'll talk about that later in another video. But yeah, just learn all the basic and just hop into the market and just look at the markets and just see, like, okay, why did price sell at this level? Why did price buy at that level? That's all it is. You want to ask yourself a lot of questions. This is the best way, the most simplest way to learn trading. And you can take it to the intermediate level when you're trading for like 6 months now, a year. You want to see, okay, where, like, looking more deeper into your risk management, your strategy, and your psychology. So like with risk management, like, am I risking the right amount? Like, you feel me? Like, there's so many things that you can do. Like, it's basically just like trading. If I can explain it, it's a big ass bush, but it's like there's a bunch of sticks sticking out, right? All you're doing is just going around and chopping off all the little twigs that are sticking out, and you want to make the bush, like, perfect. You feel me? Obviously, it's never gonna be perfect because shit is always growing. You feel me? Damn, that's a good analogy. Like, you want to chop off every day. What you're doing is chopping off all these little twigs and shit that sticks out. But yeah, that's basically all I have to say about trading. What's up? But yeah, bro. I hope you guys understood everything I've said. because I've been yapping fast. I think you should put the video on 0.5. I'll be talking fast as shit. But yeah, boys, if you have any questions, put in the comments. If you have anything you want to say, put in the comments. If you want to talk shit, put in the comments. If you want to glaze, put in the comments. I'm gonna see y'all boys tomorrow. I have a lot of shit to say. But anyways, I'm gonna end this before I start yapping. Goodbye.